Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar wraps up the first week of 2022 slightly to a bearish sentiment. I feel from the rejection that we've seen recently around that 72.65.80 area, also seen as the 60-day moving average, the bears have consistently weighed on the support. However, Friday's knee-jerk reaction on the challenge of 71.60 has put a slight positive bias to the start of this week. Looking at the candle, however, from the RSI and also from the MACD, doesn't support the current price action. It is assessed a clear break under and a close from New York of 71.60 still, I believe, keeps the downside target of 70.90 vulnerable and reassess from there. Any advancement in the short term should find resistance around 72.25 and with the 60-day moving average still looming from 72.65.80 area. As you can see, there's been many stabs and failed attempts. Well, on Friday, the US non-farm payrolls numbers came in somewhat disappointing and therefore noticed the US dollar fall somewhat heavily. However, from the rebound to the US dollar, which measures the greenback strength against a basket of 6 major currencies and is currently trading around 95.85.90, is the euro is actually struggling again to find momentum. I feel from the recent rebound in front of that level of 112.70, we may see a retest again. I feel overall the market is looking to the downside and therefore could see eventually reach its objective, which is around 111 figure 50 and reassess from there. When it comes to the non-farm payrolls, the Labour Department reported an increase of 199,000 jobs in December, well below the 426,000 forecast. However, the unemployment rate did drop to 3.9 from 4.2 in November, underscoring tightening labour market conditions. Earlier in the week, though, on Wednesday, that is last week, the markets saw the release of the minutes from the US Fed's December 14-15 policy meeting. It showed officials at the US Central Bank viewed the labour market as very tight and signalled the US Fed might have to raise rates sooner than expected. There is much speculation that we could see a hike in March and overall for 2022 3 rises. However, that being said, all eyes on Jerome Powell this week when he speaks or testifies to the Senate Banking Committee. That is at Wednesday at 2 a.m. Sydney time. As I mentioned, the euro still remains somewhat slightly softer into the start of this week, even though we did see a relatively firm rebound on Friday, but I feel overall the trend is still remaining negative. Looking at dollar yen, the market is still somewhat weak. However, we haven't quite broken the level of 115.50. Although the trend has, I feel from a technical point that now that the ADX isn't trending anymore, we could see a further slide through 115.50 and down towards 114.60 as a potential target and reassess from there. Sterling has remained relatively bullish in light of the recent Bank of England rate rise, that is, in December. With an impressive rally so far since the lows of 131.50.60, the market is getting somewhat tired or showing some fatigue, as I would say, and therefore could see a retreat from 135.90 to 136.10 resistance and look back for, as I say, a mild pullback to 135.25.35. I'm not bearish. I just expect to see a little bit of profit taking from this current rise and therefore may see a rebound anywhere from 134.30.40 to 135.25. A little bit hard to distinguish as we got a few stabs here, but overall I feel the market needs to show at least a small pullback before any renewed demand. CAD yen still shows a positive bias after clearing the resistance of 91.30.35. However, given from the RSI, I am a little bit cautious of coming out of any bullish calls and therefore could still see a bull trap anywhere around where we are at the moment to 91.80 is the next resistance. If so, then we could see a pullback towards the support region seen around 91.10 to 90.5 and reassess. A very choppy price action for gold on Friday. It did briefly pierce the level of 1,788 but closed above there. But technically we are still heavy, and with the marriage between the RSI and the MACD, could eventually see this level break and therefore expose the next target, which is a key level at 1,757 to 64, and reassess from there. Wrapping up with oil, the market reached its target of $80 a barrel and actually hit the brakes. From there, we've seen a slight pullback today. In light of the pattern, keep an eye on this RSI, because if it does break down a little bit further, we could see a pullback anywhere to around 74.80 a barrel, or with the base holding around 73.20.50 area. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day.